Do you want to know 12 reasons you should invest in an emerging market? If you're interested in knowing 12 reasons you should invest in an emerging market, then this is the video for you. If you're not interested in knowing 12 reasons you should invest in an emerging market, then this would be the best time to continue scrolling to the video that you was previously watching or the video that you're about to watch right now. We thank you for stopping by, but we're going to get into 12 reasons you should invest in an emerging market. Number one, and the reason why. When emerging market come in being, it's all about portfolio diversification. Number one is high growth potential. Emerging market often have faster economic growth rates than developing country, driven by industrialization and a rising middle class. So you see the reason why we talk most on our channel when it comes to emerging market, invest in this market, get the side hustle going, it's such and such, look out for certain market that come into being, because it's going to affect you when they try to build a diverse portfolio. Two, expand consumer market. With growing population and income level, there increased demand for goods, service, and technology. So while they're growing, there's an increase in demand for that. And once they start to get that, there's more job opportunities. So you got to get into an emerging market. Number three, portfolio diversification. Emerging market often move different from U.S. and European market, reducing your overall investment risk. We see today a lot of emerging market now is mainly in Africa. You got some in South America, but you got some in Asia, but we talk about the emerging market where everybody want to focus on is in Africa. So you got to focus on these emerging markets, so you got to capitalize. So if you're in the US, you got some resources, they're blocking you from doing what you want to do, get acquainted with knowing some of the emerging market or leave a message to me, follow, like, and share so we can get you some information that able to divert for you to know which market that you can go into when it comes to these emerging market. Number four, undervalued asset. You see why you get into emerging market, because some of those assets, we see when Burkina Faso was selling uranium for a penny on the dollar, now they finally or one of those countries that was having the uranium out of those trees, now finally sell it at the market value. So it's undervalued asset. Many emerging market stocks assets are traded at lower valuation, offering opportunity for high returns. Now the reason why we show you that, when people start to realign themselves, countries start to realign themselves, look at their books more, they're going to look at what they need to change. And if you can able to go in those market before these policy change, where like certain country nationalize their resources, then things are going to be rapidly changed. They're going to bring it back to the right valuation when it comes to the world market. Number five, access to global innovation. Countries like India, Brazil, Vietnam, Nigeria are becoming a hub for fintech, agri-tech, or clean energy and digital service. These countries are become access to that. So if you imagine this now, imagine other countries that are going to be open for those tech companies to come in those emerging markets. So you got to understand the access of global innovation. Number six, currency upside potential. When emerging markets start to develop goods and services, they're going to take care of their manufacturer, those industry, and eventually they're going to produce for other countries. So the currency upside potential is as emerging market economics strengthen, their currency can appreciate over time and had another layers of return for your investors. You see why some of these country or some of these individual in these countries that have a lot of resources, a lot of wealth supposed to be, they go into other markets now. So if they move to other markets, what's going to happen to that country if these big wigs or these big CEO moving their resources slowly out so they can put it into a different market? This is what it's all about. They want a return on their investment. They don't want to lose currency by keeping their egg in one basket. That's what they call portfolio diversification. You don't want to keep all the egg in one basket. Number 7, rising infrastructure investment. Once infrastructure start to rise, investment going to be needed. Where the investment come depends on what they do. It can be tech. All kind of level of investment can come in that emerging market. So you got to look out for some of these emerging markets in Africa so you can get acquainted with what going to be according to your living standard if you want to emerge back into a market like Africa and spend the next 20 years, 10 years building resources and wealth and venture off maximizing those potential investment. Number 7, billions. The rise in infrastructure investment is billions are being spent on roads. We understand that. So who gonna build these roads? If you got the skill to build these roads, you can put some investment on your skills to build these roads. You got energy, you got telecom, you got housing, and stimulating economic activity and growth. So all these stimulate that economy and it stimulate activity and it push growth. So you want to be able to understand why you need to invest in the emerging market. 8, natural resource wealth. Many emerging markets are rich in commodities, oil, metal, agriculture, and making them vital player in the global market. So you got to understand when an emerging market have natural resources and whatever skills you can get into those market and invest at whatever skill level you at or how you want to invest. Number 9, demographic advantage. Younger, rapid growing population create a stronger labor force and consumer base for decades to come. And you see the average medium number in Africa is 19. So imagine decades to come. By the next decade, they're going to be what? 29 or they're going to be 39. So imagine the investment and the resources you can get back from all these people. Now they're going to be 20, they're going to be 30, they're going to be 40, and you can see how your money going to trickle up as it go when it comes to looking at a market the way it is. It's all about numbers. So number 10, global supply chain shift. Once the global supply chain shift, you see things going to come, instead of go to America, you're going to go to Africa. Companies are diversified away from China and invested in other emerging nations, creating new opportunity and partnership. Besides that, China is moving their manufacture from China and going into some of these emerging markets. So don't think that they're not moving where the investment going better. While U.S. is moving away from China and going to a country like India, you got China is moving away from America and going to a country like Africa more than they used to, and making more deals than they used to. So you got to look at that. What they do is creating new opportunity and partnership. So they want new opportunity and partnership for whatever resources they have. A lot of Chinese company is pushing products to Africa. So you got to consider that. They're pushing stuff to Caribbean and everywhere in the world. But if there's a blockade somewhere, they got to look how to push stuff. They're pushing it in the Middle East. That's why they got the train line that's supposed to run all the way to Iran. And you know, products and services going to move like that. So imagine Iran is also an emerging market. So you see why some of those dispute is at hand. Let me see. Number 11, attract dividend and yield. Some emerging market companies offer higher dividend. So you see, if you're going in America, we understand America is the top of the pyramid, the apple of your eye, the big apple that you want to able to invest in. But we understand a lot of markets that emerging have a higher yield when it comes to dividend. Those developing market provide steady income. That means it's higher than those developing market. They have a higher, more steady income than other market. That's what we see when people, like let's just say people from India go to Africa. You notice they ain't going back to India, right? How about you take a look at some of that statistic of some of these people making the money, and why should they head back? They are now making a living in those emerging markets. 12, long-term transformation story. Investing in emerging market lets you participate in the early stage or of majority national transformation, especially in those countries, similar to how China developed in the early 2000s. So you see how China developed in the early 2000s. There was no real war. They was left alone. All they was doing is trade. But if you see in Africa, everybody want to be up in Africa business. They never been left alone. Always regime change. So you got to look into Africa of those emerging markets, because this is where the emerging market is, in the final frontier. So you got to get into it and don't let other people stir you, call whether or not the Europeans and the Chinese still coming. A lot of other people are still coming. The Indians still coming. The Asian, people from Middle East are also coming. So what are you going to do when it comes to invest into emerging markets? So you got to understand some of the top market to invest in when it comes to the emerging market, the country, stability, how you look, how you go invest. So we would like to help you to identify some of the top emerging market country in 2025 and beyond, so you can know how to manage the risk of what you're going to do when it comes to your type of investment. So if you want to glean some information, go ahead, send me a message, and we can provide you any information of insight of how that country might look if you want to invest in that country, or what particular skills you have to assess and assist those markets into collecting, investing, and extracting resource and get a dividend back on the return of your investment, which is a ROI. So if you want to know the 12 reasons you should invest in an emerging market, is number 1, higher growth potential. Number 2, expand customer market. Number 3, portfolio diversification. Number 4, undervalued asset. Number 5, access to global innovation. Number 7, currency upside potential. That was number 6, currency upside potential. Number 7, rising infrastructure investment. Number 8, national resources wealth. Number 9, demographic advantage. And number 10, global supply chain shift. And number 11, attract dividend yield. And number 12, long-term transformation stories. So if you find this video to be in your interest, give us a like, follow, and share. And save this video for further insight when you need to come back to this video for when you need to reach out to me so we can provide the information for you to know how these markets going to fluctuate, or how it going to benefit you, and what they're looking for if you're going to move and invest. For further video, do watch, like starting your own brand, certain things that you must look for, business, certain things you must look into when it comes to AI. Watch those videos, because those videos give you vital information if you're going to invest. If you're going to invest in the market, make sure you invest in the index fund, or some of the avenue that you're supposed to look at to make a diverse portfolio. When it comes to gold, silver, when it comes to commodity, we have a video for that too. Make sure you watch those things, because we'll provide you key essential information for you to get on the road, for start your investment today and invest in your personal brand and in your personal self. We thank you for stopping by. Look into those videos and get more insight, so you can reach out to me when you're ready to take the course of action. Depends on your plan, depends on how you look at your portfolio, and depends on your mission and your goal for yourself.